Quick note before we get started on the video, if you are interested in purchasing the future CFD's daily key levels V 3.0 indicator, you can email us at daytradinggps@gmail.com to request a discount promo code to purchase lifetime access to the indicator. To purchase the indicator, go to daytradinggps.com. Also, if you're wondering how these indicators are working for people that have purchased them, you can go to daytradinggps.com, click on any of the indicators, and you can see the reviews and trader feedback from people who have bought the indicators and used them on a daily basis. Thank you. Hello, just an intro before today's video gets started. In today's video, we're going to be taking a look at the Day Trading GPS Futures CFD's Daily Key Levels V 3.0 indicator, and using this indicator along with a free tool on TradingView to confirm our entries. In today's session, we're going to take a look at the Wednesday, April 8, 2026 trading session. So we're going to look at the ES chart in which we had a scalp trade that went for $1,262.50 in the early part of the session, and then a regular trade which went for $1,975. Both of those figures are per regular E-mini futures contract. And then we're also going to take a look at today's NASDAQ section in the NQ E-minis, in which we had a micro scalp for $1,015, a regular scalp for $2,190 per E-mini contract, and then a regular trade at the minimum threshold exit for $3,470 profit per NQ E-mini contract, and then an ideal threshold minimum move on that regular trade that went for $4,750 profit per NQ E-mini contract. Then in addition, we're going to also look at several different previous ES sessions as well to look how the indicator performed under several of the previous sessions to today's sessions as well. You can look in the description of this video for chapters on this video. So if you don't want to watch the entire video, you can simply skip through to the different chapters, although the main part of the majority of the first part of the video is going to go through how the indicator works and how to decide to stop losses with the indicator, how it works with the free tool ribbon indicator as well for confirming entries. And then we're going to go through micro scalp exits as well as regular scalp exits, and then how scalp trades differ from regular trades. So that's going to take up the majority of this video, and then during the last shorter part of the video, we'll go through all the charts and all the trades, and then all the previous for ES and NQ for today's session, and then the previous session charts for ES. Thank you. Hello, in today's video we'll be taking a look at the Wednesday, April 8, 2026 trading session for the S&P 500 E-mini futures. We'll be utilizing the Day Trading GPS Futures CFD's Daily Key Levels Indicator for our trading, and we'll also be using one free tool on TradingView, which is called Annie's Ribbon, to help confirm the entries. Okay, so as you can see in today's session, we had a massive gap up from yesterday based on the ceasefire that is currently in effect for the time being in the Iran war. So we had a gap up of approximately 175 points or so from yesterday's RTH session close. As you can see here, we have our market scenario 2 full gap above. What that means is that the entire pre-market range of today's pre-market low and pre-market high from 4 a.m. to the 9:30 open is completely above yesterday's daily high. That differs from a technical gap in which just the open is above yesterday's daily high, whereas in this scenario with a true gap, both the PML and PMH, the entire trading range of PML to PMH, is above yesterday's RTH session high. Okay, so as you can see here, here's the yesterday's daily high for the RTH, the YDH level. Here is the YDC level, yesterday's daily close for the RTH session. And then way down here, we have yesterday's daily low for the RTH session, which was 65.72.75. Yesterday's daily high was 66.59.50. Today's S&P 500 key price level, the bull bear key price level given by the indicator for today's New York RTH session is 68.31.75. Okay, so with this indicator at the 9:30 a.m. first tick of the RTH New York session open, the key levels will be generated on your chart for that session. So you'll see a table here for the bull bear key price level, as well as the R levels above, the S levels below. Then you have the second table here, which are the 5 contextual key levels, the pre-market high, the pre-market low, the YDH, YDL, and YDC levels. And then we have our market scenario here, which for today is full gap above. Now with this indicator, you also have a market scenario analysis feature. That you can turn on in the control panel. So you simply go to the control panel, and you would already have this on, enabled on before the open. So we will click to show the table. Okay, as you can see here, the table is quite large. You can resize it. So I'll show you here in a second. You can resize it down to either tiny, small, or you can make it larger if you wish. But you can resize it. You can also change the position of this particular table to many different parts of the chart if you prefer it in a different section. So as you can see here, we have the symbol session analysis for today's session. Market scenario, full gap above. Here are the levels, the 4 contextual levels that contribute to the market scenario analysis, which are the YDH, YDL, PMH, and PML levels. Then we have an explanation of this particular market scenario, along with the tendencies as well as key trading characteristics for this particular scenario. We also have key level priority. The key level priority in this case is not going to involve the key levels of the BBKPL and the R and S levels, and it's going to do only with the 4 contextual levels that are part of the market scenario analysis, which are YDH, YDL, PMH, and PML. So in the key level priority, the gap size matters, whether it's a small to medium gap up versus a large gap up. So as you can see here in a large gap up, the pre-market high is significantly above yesterday's daily high. The pre-market high becomes the primary critical level. The PMH pre-market high represents where pre-market aggression peaked and where gap participants established positions. Holding above the PMH level in RTH validates the gap and bullish conviction. Yesterday's daily high becomes a deeper support level, but is too far away to be the immediate reference for continuation. Breaking below the PMH, even while above YDH, signals gap rejection and potential fade. So we have other things here as well, as far as dominant tendencies and key trading characteristics and things to look out for. We also have one-page PDF cheat sheets for these market scenarios. So if you don't want to have this particular table on your chart, because it does take up a fair amount of space, you can use the one-page PDF cheat sheets, which I'll show you now. With your purchase of this indicator, You get a very extensive, comprehensive, detailed user guide and manual on how to use this indicator, as well as how to trade with this indicator. And you also get a link to the one-page PDF cheat sheets, which we will just briefly run through now. So these can be useful as far as having on your computer. You can download them to your computer. You can also print them out if you'd like to print them out and study them in off-screen time, or you can keep the printed out versions next to your keyboard for during the session. Or if you have multiple monitors, so if you have 2 or more monitors as far as your setup, you can simply have one of these, whatever the market scenario is for today, on one of your other monitors and view the PDF cheat sheet instead of doing the market scenario analysis table directly on your main chart. So it starts off here with a summary page of each of the market scenarios. As you can see, there are 6 market scenarios, and there are only 6 market scenarios that S&P 500 futures can open up in any given session. So there's only 6. So we have market scenario 1, inside yesterday's range. Market scenario 2, full gap above. Market scenario 3, full gap below. Market scenario 4, top overhang poke above. Market scenario 5, bottom overhang poke below. And market scenario 6 spans both sides wide pre-market, which is the most volatile of all of the 6 market scenarios. Then when you go through these cheat sheets, you'll see that they're color-coded. You have an explanation along with the physical structure. Then you also have a visual structure, which shows you, in addition to having the generic structure up here. And then we go through tendencies, key trading characteristics, and what to expect. On full gap above, we have a little bit more information here as far as tendencies, key trading characteristics, bias, key level priorities depending on gap size, trap potentials, and also some notes about volume. Same thing with full gap below. Top overhang poke above, same thing, especially also giving some additional tips and what to expect, and along with the primary tendencies and key trading characteristics. Bottom overhang poke below, same basic layout, also giving you what to expect and some tips. And then we have finally market scenario 6. Okay, so we're back on the main chart now. So the PDF cheat sheets can come in handy, especially if you don't want to have this on your chart. I'll just show you real quickly what it looks like on the smaller size. So we'll go ahead and turn this on small now. And as you can see here, still takes up a fair amount of space, but not as much as the default. Just really depends on how good your eyesight is, what your zoom on your browser set to, etc. So you can set it anywhere from very small up to very large, with normal being the default, and this is the small size. The purpose of the market scenario analysis is to give you additional context for the particular trading session. The market scenario also has a label, so you can turn on the market scenario label here. Now this is not so much being useful in the current session. As you can see here, here's the label. Not so much very useful in the current session, as you do have the market scenario here on your chart with this table. Where this does come in handy is in the historical market scenario labels. So you can go back and look at historical S&P 500 futures on previous sessions, and if you turn this on along with the other historical key levels, You can see all of the historical contextual levels for each session, all 5 of these levels, as well as the bull bear key price level, the midpoint levels as well and also the R&S, main R&S levels for all historical sessions. Then if you also show the market structure scenario labels for historical sessions, this helps in going back and looking at historical sessions, because you can start to see uh, which sessions historically, which market structures within those historical sessions tend to favor your preferred trade setups, and which market structure scenarios tend to not favor your preferred trade setups. And that process can help you refine your trading to improve your win rate, and also can give you some additional context as to when the market structure favors your preferred setups. You'll know that you can trade perhaps more aggressively on those days, because historically they tend to substantially favor your trade setups in those particular market structure scenarios out of the 6. And then also the converse of that is, if you find that there are certain market structure scenarios out of the 6, like let's say as an example, let's say market structure 3 and 4 tend to not favor your setups, and that's where you're experiencing most of your losses in a particular market structure scenario, then you could refine your trading further by knowing to either sit out sessions with that market structure scenario completely and do not trade, or if you are going to trade, that perhaps you need to do an adjustment to your trade setup to compensate for that structure, or perhaps consider different targets than you normally do, or either, like I said, just sit out and don't trade those structures at all, and only trade when the market structures are the ones that favor and give you the highest edge. Okay, so let's just pause this for a second. All right, so as you can see here, we're on a 2-minute chart. The recommended chart time frames for utilizing this indicator on the NASDAQ futures and the S&P 500 futures is going to be somewhere between 1 minute and 5 minutes. It just really depends on your trading style, what particular time frames that you prefer within that range, and then also what other indicators that you like to use to confirm entries or manage trades as well. And then obviously what chart time frames you like to use those other indicators on. So it really just depends on that. Generally speaking, our preferred time frames for the strategy that we're going to show you today, that our daily key levels trading strategy utilizing this indicator, is going to be the 2-minute time frame or the 1-minute time frame for trading NQ or ES futures. Now, this indicator does work on many other different types of future symbols as well as CFD symbols if you're trading Forex CFDs. So we'll just take a quick look at that before we go on here. So here's the list of compatible future symbols. As you can see, it also includes the micros of ES and NQ, and then we also have Bitcoin futures, as well as many other different futures. Here you can see a list of compatible futures symbols with descriptions. So we'll just slowly scroll down through here, and you can see all the different futures that this particular indicator works on. Then we have the CFD symbols if you have a Forex account, or if you're participating in a trading challenge through a prop firm where you're trying to get a funded account. Oftentimes those are foreign-based companies which are just Forex-based, and so unlike their US versions of prop firms, you would need to trade a Forex CFD version of either the NASDAQ or the S&P 500. So on other future symbols besides ES and NQ, you may, it really just depends on the liquidity of that particular symbol. So generally speaking, somewhere between 1 minute and 5 minutes. However, if you're dealing with something that has a lot lower liquidity, then you may need to just start at 5 minutes and maybe go look between either the 5, 10, or 15 minutes. Okay, so as you can see here, we also have another indicator here, Annie's ribbon. Now, this is a free tool available for free on TradingView. The day trading GPS futures CFDs daily key levels indicator is a paid indicator. It's an invite only paid indicator. The tool that we're going to be using to help confirm entries given by the daily key levels indicator is the Annie's ribbon. Annie's ribbon is a moving average ribbon. It is similar to the original Madrid ribbon, which is also free on TradingView. However, it does have a couple of little nuanced differences between the Madrid ribbon. So, in our opinion, the Annie's ribbon is going to be a superior ribbon to use for this particular purpose. So the idea of using the ribbon is to help confirm the bullish or bearish entries given by the daily key levels indicator for either closes, bullish entries for closes, candle closes above any of the main key levels or the main contextual key levels, or for bearish entries for candle closes below any of the main key levels or any of the main contextual key levels. All right, so as you can see here, we have a 9:30 a.m. BBKPL bearish alert here given by the future CFD's daily key levels indicator. So this is going to be your bearish entry signal on the 9:30 a.m. opening candle. The way that this particular alert works, you have your control panel here. We go down to the alert section. And you're going to see this section here, 9:30 a.m. opening candle close BBKPL level alert. So you enable that. It's enabled for a candle close above or candle close below. And we also have apply range filter checked. When enabled, as you can see in the tooltip here, alert only fires if the 9:30 a.m. candle close is within the acceptable range of the BBKPL level. So the purpose of the BBKPL 9:30 a.m. opening candle close alert is to alert you to either a bullish or bearish trade signal for that opening candle. The purpose of the range filter, which is, you can see here, here's the range filter, it's set to 85. That is a percentage of 1.00 standard key level, the base key level, which is the distance from the BBKPL to R1 or S1. Default of 85% means alerts only fire if price closes within 85% of one standard level from the crossed level. In this case, the cross level is the BBKPL, specifically on the opening 9:30 a.m. candle, which is going to be the opening candle for whatever you have your chart time frame set to. If you have your chart on a 2-minute chart, then that first candle is from 9:30 to 9:32. If you have it on a 1-minute chart, the opening candle is 9:30 to 9:31. If you have it on a 5-minute chart, it's 9:30 to 9:35. And we do have crossed and closed above alerts and crossed and closed below alerts for each of the main key levels, as well as each of the 5 contextual levels. So including the bull bear key price level as well. The one for the bull bear key price level under the crossed and closed above and crossed and closed below is for the rest of the session. This particular alert is only for the opening candle for the BBKPL, whereas this BBKPL alert and this one are for the rest of the session. What the range filter keeps you out of is that if this candle close, say had closed near S1, it would be out of range. It would be more than 85%. Then you would not see this alert label come up. And the same thing is true in the opposite. If this was a candle close above and it had closed near R1, then, or let's say it had closed above R1, or in the case of a bearish one, below S1, then you're not going to see the alert because the candle has to close within a certain range in order to be a valid trade entry for the a trade to be taken off the BBKPL level on the opening candle trade. And the same thing applies throughout the rest of the session if you turn on the alert for the rest of the session as well. The acceptable range filter is set to a maximum of 85%. You can set it to be more than that if you wish. We don't recommend doing that. If you're going to set it to anything different than 85%, then you should set it to something less than that if you prefer trade entries that are closer in, that are still closes above or closes below the specific key level in question, but you prefer trade entries where they are closing above closer to the level or closing below closer to the actual level than the 85 percentile range. All right, so we'll go ahead and we'll turn off this other label here. Get rid of this. All right, so we have this alert here from the daily key levels indicator on the 9:30 a.m. opening candle. As you can see here, we do have Annie's ribbon, and we're using this to help confirm the entry. If this ribbon was green and we were getting this bearish alert here on the opening candle, then there's no trade because we're getting conflicting signals. It is all red. If it was part green and part red, then there would still be no trade because what you're looking for is confluence between the two indicators. You're looking for the candle close above or candle close below the specific key level in question, in this case the BBKPL in the 9:30 a.m. opening candle. And you're looking for confirmation from the ribbon indicator as well, being the exact same color in full that of the direction. So in this case, the direction is bearish from a close below. It is within the acceptable range. So this is our go ahead for the opening candle bearish trade. Now in the next screen, we're going to take a look at a 1-minute chart. This is the 2-minute chart. This is my particular preferred time frame for trading this particular symbol. It's also the preferred time frame for myself for trading the other version of S&P 500, which is either the SPY or the SPX. However, futures is a little bit different. One reason that futures is a little bit different than, say, SPX is because with SPX, the SPX index, which you may have seen our videos on the SPX index, which comprise most of the videos on this channel so far. The SPX index, you can only trade options if you're trading the SPX CBOE or you're trading the mini SPX index, the SSP. You can only trade options. You cannot trade it directly like you can with futures. And so since we have to use options specifically either 0 DTE or 1 DTE options to day trade the SPX index, we don't really have as precise an entry instrument as we do with futures. Because with futures, we also have leverage like we do with options, with futures contracts. However, uh, we don't have to deal with any of the negative aspects of options, which some of those negative aspects are going to be, some of the Greeks. So you have a delta value. So in the, if you're dealing with at the money option, you're dealing with approximately a 50 delta. If you're dealing with out of the money options, then you're dealing somewhere between, at least the ones that we show that are slightly out of the money, you're dealing with anywhere from a 25% to a 40% delta, depending on what's going on that day. So, whereas with futures, you're getting tick for tick, either profit or loss. Also and you're also getting a direct entry at a specific price. Whereas with SPX, we're choosing strikes to enter based on the uh, particular key level that we're trading off of, and then we're choosing one of three different strikes, either at the money at the same price of or the one closest to the price of the key level that we're trading, or the other option is to out of the money strikes in the direction of the trade. With futures, we just have a direct entry when we have a signal. So we don't have it getting kind of washed down a little bit with option strikes, with the delta value. And then also with options, you also have the time value element built into the cost of the option, which has to do with the VIX and the implied volatility for that day as to what the time value premium, volatility premium is going to be. And also you have the time decay uh, to also be concerned with, because if you're dealing with especially 0 DTE options, 0 DTE options are going to expire at the end of the SPX session that day. 1 DTE expires the following trading session day at the end of that one. In either case, you are going to have time decay also to deal with, which can erode the value of the option. And so you have that to contend with as well. Whereas with futures, you do not have that to contend with. So there is no, we're not dealing with options on futures. We're simply either buying micros or regular E-minis. Okay, so now we're just going to pause and go to the 1 minute chart. Okay, now we're on the 1 minute chart. As you can see here, we still have a close below. 1 minute chart, 1 minute chart, you're going to be able to get into a lot of entries a little bit quicker. I found that the 2 minute chart works best for my purposes. You may feel that for your purposes and your particular uh, way of doing the strategy, that the 1 minute works better for you. So first of all, we're going to go through how the trading strategy works as far as stop loss and exits. And then we're going to look specifically at today's trade so far. Okay, so with this indicator, as far as taking a trade off of one of the main levels, which is the bull bear key price level or one of the R or S levels, your stop losses are going to be either the midpoint level or the QL level. If you're taking a bullish or bearish trade off one of the 5 contextual key levels, then that is done in the user control panel by simply going down to that section for stop loss and take profit for those contextual levels. And then you have a bullish entry section followed by a bearish entry section in which you choose either a standard stop loss or a tight stop loss. Then you choose your reward risk multiplier to use, which is anywhere from 0.25 or going up to the default level, which is 2, or you can go up in 0.25 increments above 2 all the way up to 30. And you can do that individually for each of the 5 contextual levels, either a bearish trade or a bullish trade. But with the bull bear key price level and the R and S levels, you're using either the QL level above or below, depending on whether it's a bullish or bearish trade, for your tight stop loss, or you're using the midpoint level above or below the level you're taking the trade from as your standard stop loss. Now with this particular trade, your tight stop loss is going to be the QL level above the level that you're basing the trade off of. In this case, the BBKPL. So that's going to be the QL above the BBKPL. If you instead want to use the standard stop loss, it's the midpoint above the BBKPL. That is this mid BBKPL R1. If instead this was a bullish trade, then it would be the exact opposite. Our tight stop loss would be the QL below the BBKPL here, or our standard stop loss would be the midpoint below. And it works the same off of the other levels. If you were taking a bearish trade off of, say, the S1 level, then your tight stop loss would be you would turn on the QL above S1, which we'll just do that real quick just to show you. So you would simply go here. You can turn it on in advance if you're normally looking for that type of trade. As an example, you could turn on the QL levels in advance. So basically you go here and go down to QL above S1. And then you have it here. And you can do that with any of the other levels. Turn on the QL above or turn on the QL level below each of the main key levels. The ones that are on by default are the ones surrounding the BBKPL, because that is normally the level that's in play in the initial part of the session. Okay, so there's two different types of trades that you can do with this indicator. One is a scalp only trade and the other is a regular trade. Now the scalp only trades with futures are a little bit different than, let's say, with the SPX index indicator or our NASDAQ NDX index indicator. And the reason for that is why you have a little more flexibility with the scalps with the futures indicator is because of the precision entries and not having to deal with the aspect of things being a little bit more watered down by having to use options as you do with SPX index and NDX index. So since we have more precise entries and exits with the as far as the trading instrument that we're using, as far as the pricing with futures, then we have a little bit more options that we have as far as target exits for scalp only trades. So what exactly do I mean by that? So with, for example, the SPX and NDX indicators, we're looking for a one level move in our favor for the scalp exit. So in this case, on a bearish trade from the BBKPL, a one level move in your favor is the S1 level, because that is a one level move in our favor from S1. And that's calculated from the level we're actually taking the trade from, the one level move, not from the entry point. So you can do the same thing with the futures indicator. So that is one option for scalping, is just doing the same thing as we do with SPX and NDX and looking for a one level move in our favor calculated from the level that we're taking the trade from, basing the trade from, and looking in the direction of the trade and going to the next main key level, in this case, which is below, and that is S1. The other options that you have with this, it really just depends on where exactly your entry is relative to the key level in question. So in this case, for example, because this entry here is right around this point here, you have, as you can see, it's above the QL level below. So here you have the New York pre-market low here. And as you can see, this is a contextual key level that is occurring before the S1 level. So if you prefer to do a micro scalp, whereas you're not looking to get the full one level move in your favor, and you wanted to just do a micro scalp, then your exit could just be the pre-market low. Because this is a contextual key level that is occurring prior to hitting the one level move in our favor. And on futures, since we have the more precise entries than we do with options, and we don't have all those other aspects to deal with, the delta value, the time decay, the implied volatility, premium, etc., and we have a direct entry on the precise entry at the close of this candle at a precise price with no time decay to deal with and none of the other aspects of the options to deal with, then we can still get a nice profit on taking an exit here at this contextual level if we feel that that is more of a preferred scalping strategy than going all the way down to S1. And that would depend on where this entry is. So since this entry is back here, and the PML level is here, then we still have a decent reward risk here compared to the stop losses, whether it's tight or the standard stop loss that we're using. If this candle close was, say, closer, and let's say this, the 9:32 a.m., was actually, if that's where it was, as you can see, even though this would still be some level of profit here, it's not very much. So in that case, you would still want to go down to the S1 level. Now, the other type of trade that you can do with this indicator is called a regular trade. On a regular trade, you're looking for a 1.5 level move in your favor. And that is calculated in the same fashion as the regular scalp. So we're taking the level that we're basing the trade off of, the direction of the trade, and we're looking down 1.5 levels from the level that we're basing the trade on, and that is the mid S1, S2 level. The difference between a regular trade and a scalp only trade, a scalp only trade, you are 100% exiting your contracts. So there's no stop loss adjustment. There is nothing but just entry and exit. So it's just a simple black and white move of entry and exit. No stop loss adjustment. The only difference here with the futures is if you wanted to do a micro scalp, then, as I said, is if you, depending on where the exact entry was, then you could exit at a contextual level if that was occurring before the one level move. Now, with a 1.5 level move in your favor, you have a couple of different options available that are different than the scalp. So on the scalp, it's exit only, no stop loss adjustment. On a regular trade, you have several different options available. One is just going ahead and exiting all of your contracts just like you did with the scalp only, except that now you have a full 1.5 level move in your favor from the trade from the level that you were basing the trade on. The second option is to adjust your stop loss to break even or break even plus a small profit buffer. Now with SPX options, our profit buffer is, if we're going to add something to break even, is going to be uh, between 10 and 15% as far as the initial one. However, with futures, it's a little bit differently. It's done a little bit differently. So with SPX with options, we're adding if we're going to break even, we're going to the price we paid for the option. So remember, when you start a trade, your stop loss is based on a level. When you are adjusting your trade, then you are, for example, you're not moving your stop loss to the BBKPL, the level that you're basing the trade off of. You are then adjusting your stop loss to break even is going to be changing your stop loss to the price that your, in this case, bearish trade of shorting the E-mini futures was done at. If you're adding a profit buffer, that's really going to be trader's choice there as to how much of a profit buffer you want to add on top of break even. That could be as little as, say, 4 ticks, which would be 1 point, or you could use the key levels as a gauge here. So let's say you were at this level right here when you're making the adjustment. Then you could adjust it to, say, the S1 level or the QL level above, or say the pre-market low level here. Or you could just adjust it by just adding whatever amount of ticks that you want on top of the executed entry price on your trade, which in the case of ES would, say, be at least 4 ticks or 1 point. The third option is going to be if you're trading multiple contracts. So for example, if you're trading micros, you can trade 10 micros for every one regular E-mini contract. So let's say that you were trading 10 micros, you were shorting 10 micros here. When price hits the 1.5 level move in your favor, this option would entail scaling out and exiting and closing out somewhere between 60 to 90% of your original position, and then adjusting your stop loss to either break even, what your executed entry price was, or break even plus a profit buffer on the remaining runner contracts. So if you were trading, for example, 10 micros, or even if you were trading, it really just depends on how many contracts you're trading. So if you were trading 5 micros as an example, and you exited 3, that's 60%. If you exited 4 of the 5, that's 80%. If you were trading 10 micros and you exited 6, that would be 60. If you exited 7, that's 70. If you exited 8, that's 80%. And 9, that's 90%. So whether you're trading regular E-minis or micros, this option would be available if you're trading 3 or more. So you need to be either trading 3 micros or 3 E-minis. And that is because in the case of 3, you would be exiting 2 of them and leaving 1. If you're trading 2, then that is a little bit different situation because you're only able to exit either all 2 of them or just 1, which is 50%. So for those that are just trading 2 contracts at a time, if you're trading 2 E-minis right now, you might just want to consider trading 20 micros as an example, and that way you have a little more flexibility as far as being able to exit the majority of your contracts, whereas with 2 E-minis, it's really just still like trading 1. It's really more of an either-or situation because you can't exit the majority, you can only exit half. Then, as we said, what you're doing is you're adjusting your stop loss to break even or break even plus a profit buffer. Now, if you did that on today's session, then you would have eventually gotten stopped out on this move back up once it bounced above this mid S1, S2 level here. Then we started trudging back up. And then if you were stopped out here, then you could have, for example, entered a bullish trade here off of the S1 level once we have a close above here, as you can see. And we also have a ribbon that is all green. So if you took the majority of your profits here by selling 60 to 90%, you adjusted your stop loss and your runners. The runners were stopped out. You're still looking for an additional trade if you haven't just taken your profits and gone to do something else for the rest of the day. If you're still continuing trading, then this would be the next trade opportunity here. Bullish trade off of the S1 level, either turning on the QL level below S1, which is here, or using the midpoint below for the standard stop loss. And as you can see here, we did get a move back up to, again, if you were doing a micro scalp, you would be getting out at the PML level here off of this trade, because that is still where this entry is, far enough away for a decent reward risk. And it's occurring before the one level move in our favor, which in the case of this S1 trade would be a move back to the BBKPL level. All right, well, now let's just look at the exact breakdown here off of this trade and look at the amount of points that we're getting on both a scalp and a regular trade. Okay, so we have our 9:30 a.m. bearish close here confirmed by the ribbon. 9:30 a.m. close price 68.2825. We have a hit of the PML level. That's going to happen here on this candle here at 9:40. We have a hit of the PML level. The PML level again is 68.17. So 68.25 down to 68.17 is going to be 11.25 points. So it's $50 a point on a regular E-mini, or if you were trading 10 micros as an example. So that is going to be $50 a point on one regular E-mini. So that's $562.50 on 11.25 points. Next, we have a hit of the S1 level. That happens at the 1031 candle right here. And that is 68.03. So we have 68.25, 68.2825 down to 68.03. So that's going to be 25.25 points times $50 a point for one regular E-mini, and that's going to be a profit of $1,262.50. Of course, that doesn't include any commissions and slippage. Next, we have the regular trade hit here on the 10:55 a.m. candle of the mid S1, S2, 67.8875. So that is going to be a total of 39.50 points from the original entry. At $50 a point, That's $1,975 profit. Okay, now we're on the 2-minute chart. We're going back to the original 2-minute chart. As you can see, this entry here on this 2-minute candle did go down a little bit further. So on this particular close on the 9:30, the entry 68.20.25 on this candle close. Same stop losses as on the 1-minute. However, since this is so close to the PML level, that as a potential micro scalp exit is out because the PML level is 68.17. As you can see, it's just simply too close for that. So our scalp only exit is going to be the S1 level, 68.03. So that is on the 10:30 candle here. Hit of the 68.03. So that is going to be 17.25 points, $50 a point on one E-mini regular E-mini contract. So that is going to be $862.50 before any slippage and commissions. 10:54 a.m. 2-minute candle hits the mid S1 S2 level. That was the regular trade 1.5 level move. 67.88.75 hit. So that's going to be 31.50 points from the original entry. So that is going to be at $50 a point on one regular E-mini contract. $1,575 profit. So now what we're going to do is we're going to take a look at the previous sessions. We're going to take a look at the last couple of ES sessions. And then finally, we're going to just look at the NQ for today as well. Okay, so we're actually going to take a look at the NASDAQ NQ E-mini futures chart for today first. Then we'll finish the video by looking at the last several sessions of ES. Okay, so we have the same situation here. We have a close below. We have the 9:30 a.m. BBKPL close below alert. We have the red ribbon, which is confirming this entry. 9:30 a.m. candle close, 25.185. As you can see, this candle closes here, so there's enough distance between here and the PML to consider this as a micro scalp. On this candle here, this green candle with this long wick, it does touch and go slightly below PML. So when it hits the PML 25, 134.25 on this candle, that is going to be 50.75 points. NQ E-minis are $20 a point, so that's $1,015. Next, we have the S1 hit, the regular scalp hit, one level move. That's on the 9:51 a.m. candle here. The S1 is 25.075.50. That is 109.50 points from the entry at $20 a point. So that's $2,190 for that one regular E-mini NQ. Next, we have the 10:47 a.m. candle here. That's where it hits mid S1, S2, 25.011.50. So that is going to be 173.50 points times $20 a point, 3,470. Of course, that's before any slippage and commissions. Here we actually have a moved all the way down to S2. So on this, if you did the stop loss adjustment, you were able to get one more level move here. So now we have a full 2-level move. It's known as the ideal 2-level move. Okay, and that is 24,947.50. That is going to be 237.50 points. So that is a profit of $4,750 per NQE mini contract. All right, so now we'll take a look at the last several sessions of ES. We're not going to run through all the different prices on each one of these other ones. We're just going to basically look at the framework and the trades for each one of these previous sessions. Okay, so first we're going to look at yesterday's session. This would be Tuesday, April 7th. As you can see here, we also have a BBKPL bearish alert on the 9:30 a.m. opening candle. The ribbon, even though it was part green, part red on this particular candle, it is all red. This is on a 2-minute chart. As you can see here, for this particular session, we have market scenario 6, high volatility, wide PM range. So again, the market scenario 6 is where the entire pre-market range, PMH to PML, is completely outside of the YDH to YDL previous RTH session range. Whereas the PMH is above the YDH and the PML is below the YDL. Okay, so we have the ribbon confirmation on the 9:30 a.m. BBKPL close. As you can see, this is pretty close to this YDL level, so I don't know if you would consider that too close for a micro scalp. However, the PML level, as you can see, is before the S1 level. So a hit of this PML level here would be your micro scalp. Your S1 level hit here would be your one regular 1.00 level move in your favor regular scalp here. And then we have the mid S1, S2, S hit here. That would be your regular trade exit. Next, we'll look at the session before this. Okay, so what we're looking at now is Monday's session, 4/6/2026. In this case, we have a bullish candle on the BBKPL. 2-minute chart. As you can see here, if you did take this trade and use the tight stop loss, you would have been stopped out here on the wick of this candle. That's why we recommend most times to use, as you've seen in our other sessions on SPX and on this channel, that the standard stop loss is the preferred stop loss. If you're going to use the tight stop loss, that's fine as well. However, it is a little more prone to getting stopped out. So in this case, again, it's off the BBKPL level. We have our market scenario 4 for today, top overhang, put below. As you can see here, the both the YDH and PMH are before the R1 level. So the R1 level would be your scalp, regular scalp exit. In this case, because of where the close of this candle is, there is sufficient distance between this and the YDH to consider this as an alternative exit for a micro scalp. Also, the PMH is before the R1 level as well. So that can also be one. As you can see, it hit any one of these levels, including the R1 regular scalp. Okay, so next we're looking at April 2nd. That was last Thursday. Good Friday was on the 3rd, so the market was closed. The RTH market at least was closed for that day. Here we have full gap below market scenario 3. We have an opening candle BBKPL opening candle bullish alert. At the time that this candle closed here, the entire ribbon was green. As you can see later on, it turned partially red here. Turned all green again here. So if you missed this one, if you missed, if perhaps you were getting a cup of coffee or you missed this particular entry here, you could have re-entered on either this candle here or this candle here, again, where the ribbon's all green and we're getting a close above. As you can see here, the ribbon was never red for a close below. So these are no entries here. If you missed this one and then you're thinking about these here, there would have been no entry here because the ribbon is either red and green here or all green. So that's conflicting, whereas this is the confluence. So we have confluence here and we have confluence here. Now in this particular situation, this particular session, the PMH is before the R1. So that would have been your micro scalp exit here when it hits the PMH, regular scalp exit here at R1. In this case, we did also get a move to mid R1, R2. So that is your regular trade, 1.5 level move here. Then we have the 2 level move here. Any contextual level after the 1.5 level move also counts as an additional waypoint on regular trades. So you have the YDL here and the YDC here. Also, any midpoints count as well as any additional key levels on that. So if this had kept going up and hit YDH, that would have been one, R3. So basically, any main key level, midpoint level, or contextual level that is in the direction of the trade after the 1.5 level minimum threshold move on a regular trade also counts as an additional waypoint. As you can see here, we got a move up to the YDL and also YDC and mid R2, R3. Okay, so that's going to wrap it up for today's video. If you do have an interest in finding out more about how this indicator works and looking at all the different features, we did not touch on all the different features that the indicator has today. So if you want to see the full features video, which also goes over all the inputs and features of the indicator, you can look in the description of this video and there'll be a link to that features and setup video. Also, as mentioned in the first part of the video, if you are interested in purchasing this indicator, you can send us an email at daytradinggps@gmail.com to request a discount promo code. To purchase the indicator, you go to daytradinggps.com, where you can also see user reviews and feedback from traders who use our daily key levels indicators on a daily basis. Thank you.